So in Jeff Bezos' very first capital round that he raised, he sold 20% of the business for $1 million to around 50 investors. And so imagine the return on that today for that $1 million for 20% of Amazon. It's more than he still controls to this day, for context. And he took that to buy the initial inventory, get the website established, hire the first developers to get this going. And so if you're going to take on financial debt, use other people's money into your business. If you have a market that must be captured quickly in order to get a network effect of some sort, or you have huge amounts of capital that are required to make the business start to begin with. So if I wanted to start, call it a pharmaceutical business, then I would probably have to have capital for an extended period of time to start a new drug, to do the research, and then maybe 5 years after we get the licensing, then have the ability to print money. But that capital would have to come from somewhere. And so unless you start as a billionaire to begin with, which you absolutely could do that, hypothetically, but the vast majority of these businesses are not started by billionaires. They're started by everyday people who have a good idea. And then they go to people who have capital and say, hey, I will give you a piece of this upside. Now, this is the live fast, die hard style of making money. The reason it is that way is because it will typically be very investor favorable, especially the earlier it is, because they are taking on more risk.